Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, we have some major news items that you need to be aware of. We of course have the first presidential TV debate between Donald Trump and rival Joe Biden, which is guaranteed to be a huge market moving event. Back in September of 2016, the first presidential debate between Donald Trump and Hillary Clinton, that sparked a 5% move in the precious metals. So you definitely want to have that trading event on your calendar. Now, last week, Donald Trump, he declined to comment to a peaceful transfer of power if he loses, and stated that he expected the election battle to end up before the Supreme Court. So with the expectation of a delayed vote count, traders are now bracing for higher than usual volatility across October, November and December. And of course, with that volatility, it's absolutely great for trading. Now, elsewhere, the other big market moving event will of course be Friday's non-farm payroll data. This month, the Federal Reserve, they announced a big shift in their monetary policy strategy with the goal of placing their primary focus on achieving maximum employment. So if the Fed is focusing exclusively on employment to determine any future quantitative easing, then as traders, this data will significantly drive market sentiment, it will drive price direction, and we want to keep very much on top of that data. Now, finally, of course, we've seen a second wave of coronavirus infections, and we want to see how governments further respond to this as we go into next week with the rush to reintroduce restrictions on activity and new lockdowns. And of course, in these fast moving market conditions, this is where data is power. If you want to thrive in these fast moving markets, you need to be nimble. You have to be adaptable, able to utilize a research driven approach to ensure that you're getting the ultimate edge to capitalize on each of these big moves. No matter whether the market goes up, down or sideways, you want that accuracy and precision. This is where technical analysis and those outdated technical indicators will just not work in these market conditions. And if you're relying on that, you're not going to have an edge in the markets. This is where you'll consistently miss out on trades, you'll get FOMO, and you'll get chopped up. The greater the data and intelligence you have, the greater your edge will be. You need to know how the hedge funds and banks, the money managers, they position themselves in the markets, where they're buying, where they're selling in real time, so you can get your timing precise. The key liquidity levels, fundamentals, macro intelligence, seasonal cycles, the intermarket correlations. You need to trade like a professional, utilizing a research-driven approach. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. So firstly, let's move over to the metals. We can start off today with platinum, which has been a great market for us over the month of September. As we previously mentioned to you, we banked with a really sizable move here on this breakout to the upside for 575 points on the breakout. We subsequently also capitalized on a breakout on the dollar over the last week. We also caught a 400-point breakout on natural gas and 200-point breakout at the start of the week with gold as well. So in the latest week, in terms of points banked, we've banked over 700 points. For each one lot traded, that's $7,000 profit. For each 10 lots traded, that's $70,000 of profit. Just to put it in monetary terms for you. And where we are at the moment with the platinum price action, I would keep a very close eye on this current zone around 800 to 840 US dollars per ounce. Now, alongside looking at platinum, it's really useful to look at the ratios as well here. So the platinum to gold ratio at the moment has come down to its most extreme level that it's been in several months, where essentially platinum prices relative to gold are extremely cheap right now. They're less than 50% of the price of gold. And typically this is where platinum can really stage a recovery. And I would keep an eye on this. Over the last couple of days, platinum has started to turn around from key levels of liquidity here. You can see very clearly where we're getting a bid around 830 US dollars per ounce here. We've had 3 tests of that level. What I would like to see going to next week is where the platinum can start to get some additional support at this zone, lead a potential bounce here and a retracement higher. If it was able to do so, you've then essentially got a bull flag, and we've had quite the sell-off right on platinum. So in the last week and a half, it sold off over 1,500 points. We mentioned this before to you, that typically platinum at the end of September, we see this big sell-off. We've also had end of quarter profit taking in the latest week as well. So third week of September, put it in your diaries for next year. Typically, this is where you see that end of quarter profit taking in the markets, and this is what often happens on the third week of September. It's not only happened in platinum, it's happened in gold, it's happened in palladium, and it's also happened in silver. But now we've had that big sell-off to the downside, this is where you can start to look at the markets once the dust has settled and look for the opportunities. So out of those metals, platinum has sold off the most. So again, I would definitely keep an eye on platinum going to next week. What I would look out for is buying evidence and the potential to springboard off this 800 to 840 zone. If we can pick up some momentum to the upside, this is where you want to look out for, of course, higher closes, a break back above Thursday and Friday's highs, and the potential to then break out of a bull flag and then come back towards the neckline essentially on this market. So I would definitely have platinum on the radar. Platinum to gold ratio is favoring along on this market over gold, so it does suggest that platinum in the short term is going to outperform gold. Then moving over to palladium. So this is a trade that we've currently got over 1,000 points on this position, running over 2 trades. And we've seen again, middle of last week, support coming back into this market. 4 tests now of 2,170 US dollars per ounce. We keep getting a bit of that level. And I would also look at palladium here. If we were able to break back above Thursday, Friday's highs, you also have a bull flag formation here as well. Nice neckline overhead where we could start to make that move, retest the neckline here, and typically palladium does move well over the month of October. So I would keep an eye on this. So far, we keep getting higher lows on this market. You can see here where we've had 4 tests last week of 2,171. We don't close below 2,200 US dollars per ounce here on palladium. Hedge funds and money managers, they've increased their overall net longs as well on this market in the latest week. So I would absolutely keep an eye on palladium here as we continue to go into the next week. And by the way, trades like this on palladium, where the price action goes up and down like this over 4 days, retest the same level, this requires a lot of stamina. Most retail traders in the market, they don't have stamina. They will panic sell out of positions like this. If they see a level tested 4 times, they're likely not to have the resilience, the stamina, or the conviction to stay in the trade. This is where they panic sell out of the position only to then see a massive move in the original direction that they intended on the trade, but they're not there with the move. And what do after they see the big move? They then FOMO in, get in at the top, and then get taken out or chopped up. So I would definitely keep an eye on this market going to next week. It's really consolidated enough to shake out a lot of the retail traders, the weak hands in the market, and I would look out for this. If we can break above the neckline, we can really start to pick up some decent momentum here on palladium. Now moving over to gold. So gold has tested 1,850 US dollars per ounce here for 3 days in a row, and what we've seen here is a bit of a classic move where gold has come down to 1,848 US dollars per ounce. It's taken out all the stops that resided just below 1,850. 3 days in a row, we're getting support around this zone. Gold closing at 1,860 US dollars per ounce at the moment. We are at a key area here, which basically, if gold holds at this zone, this of course is where we could springboard higher and really start to see a move back towards the neckline that was broken down in the latest week. And you have to bear in mind, this is very common, right, in September to see this sort of price action. All you need to do on your chart is go back to the 3rd week of September of 2019. We had the same price action, the end of quarter profit taking. At that point, there was a 770 point sell-off in the matter of just 1 week, and the same has happened here again. Subsequently, the following week, we saw a V-shaped reversal to the upside, and then we just continued to consolidate into October. But it's worth bearing in mind, this is very common to see this profit taking in the 3rd week of September. So the big question now is, are we going to see similar price action here? Are we going to see a bounce now as we get into the last week of September? Of course, the volatility, which comes as well on Tuesday as we go into the first US presidential debate and Friday's non-farm payroll. But I would certainly keep an eye on this zone going into next week to see whether we're going to be able to hold up above 1,850 US dollars per ounce. Because if we do, and if we see the same sort of price action that we did observe last year in September with the end of quarter profit taking, the subsequent reversal and retracement, we could then start making a move back towards the upper end of this channel and then back towards the neckline again here. So I would definitely keep an eye on that. Then moving over to silver. Now the gold to silver ratio had a significant breakout in the latest week. It broke out from 70 to 1 all the way to 82 to 1. And we mentioned it before, when you're trading gold and silver, you need to be tracking the gold to silver ratio and understanding whether we're in a risk on environment or a risk off environment. But essentially in the latest week with the gold to silver ratio, we have seen a significant breakout to the upside. With that, gold has outperformed silver. Silver has essentially melted over the last week here. We've seen a significant 18% sell-off to the downside. So going back to the gold silver ratio, it had a significant breakout in the latest week to the upside, which always means you do not want to be buying silver when the gold silver ratio is breaking out and going higher. You must wait. So whenever the ratio is breaking out, do not reload on silver. You have to wait for the ratio to break back down again. That's what we started to see there on Thursday and Friday. So what we want to observe again going into next week is whether we're going to be able to hold around this 22 US dollar per ounce handle and then start to get a retracement in the following week here, especially if we're going to see the normal sell-off that we see at the end of the quarter here in the third week of September, and the following week the potential for a bounce here. And if we start to see a retracement on the gold silver ratio, if it breaks back down again, if you were to see the dollar index start to pull back as we go into next week, that's where you have the potential for a bounce higher here on the precious metals. And again, you want to look at those correlations, look at the ratios, look at whether we're in a risk on or risk off environment going into next week. Of course, you want to pay a lot of attention to the US presidential debate. You've also got non-farm payroll data next week as well, and keep a close eye on the dollar index as well. This is where you want to be trading the same way that the hedge funds, the money managers, the institutions do, utilizing a research-driven approach, our data, our market intelligence, which will give you that edge in the market. So if you would like to join a community of successful traders, learn a research-driven approach to the markets, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also have access to real-time trade alerts, trading research and market insights, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.